Hi there folks, welcome to another clip here on my YouTube channel. First of all, I would like to thank you very much appreciated for all your likes and all the views you made. You are truly awesome. Of course, I invite you to do so this time as well. Very much appreciated. On top of that, if you simply just add that kind of a channel, you'll be a member of it. It's very easy just to click that red button here on the YouTube platform, and that's it. Okay, today let's have a look at the NDX, so the NASDAQ100, and we'll be checking out that chart technical picture right now. All right, folks, simply waited until the Friday close just to check that data 100% completely. So as you know, I use a lot of Fibonacci retracements, the Fibonacci analysis, and I'm just showing you this one here is a 1 year picture on a daily basis. You see the low, starting from the low, which is here at March 21 at exactly 12,208.39 points. And this one is going up to the level of the September record high at 15,701.40. So these levels combined for a Fibonacci analysis, and the platform gives you the usual Fibonacci retracements like 76.4, 61.8, 50, 38.2, 23.6. So I added exponential moving average 100, that's the blue line here, and exponential moving average 200, that's the red line here. And as you can see, there's this red EMA 200 hovering around this 50% level from the low to the record high. And this is the reason I simply put that black line here just shy above that 50% and scratching the EMA 200 here, and just counting down this kind of move from the Friday close to this level is around 5.5% discount. Okay, so this could be a first target to the downside, just regarding that 50% or half level of the whole move here. This would be seen in a combination with a retest of these levels. See the high here and this black horizontal line, just giving you a little bit of impression where this low from the upside here and this high here is. And of course, don't forget these kind of highs here. So just see them in combination. Another target to the downside could be the 61.8 level, which is around that level of, just let me check that one here at another screen, in round that 13,550s. This could be something like a -8% move from the Friday close we see here. So these two levels are simply added with that black line just to show you that stuff. Having a look at the relative strength index, you see that this kind of a bumper down here is already in oversold territory, and oversold territory twice or 3 times, and moving back from the Friday close, moving back up in neutral territory, trading around 33 points right now. All right, that's from the chart technical perspective. And of course, you see there is this one, the gap to be filled, question mark. It's just a theory that from the Friday close, we'll be seeing something like a Monday sell-off or something like a smaller sell-off, and a retest of that gap for a so-called turnaround Tuesday. Just possibly, guys, just possibly. All right. After that, we could lead down to this correction moves again. Just saying. Just imagine a couple of trillion US dollar companies like Apple, Amazon, Microsoft. They are all members of the NASDAQ100. So if they simply have something like a 5 to 10% correction, this has a huge effect on the whole NASDAQ100 as well. So just saying, and checking out a couple of fundamentals right now. All right, folks, now let's check out the average NDX 100 just from the facts. And based on the facts, the current facts, the NASDAQ 100 consists of way over 100 titles. And if you simply check the first 10 titles, so the top 10, you'll be learning that these top 10 right now have a weighting slightly above 52%. That's a lot, of course. If you check out the first positions, so the first big positions, the big fat boy is definitely Apple. So Apple is around 11% right now, and you'll be adding Microsoft at second place, and you'll be adding Amazon.com and Tesla. So you got 4 companies, 32% weighting of the whole index. So almost a third of the whole index weighting is from 4 companies like Apple, Microsoft, Amazon, and Tesla. So that's a lot. So simply imagine if companies like these 4 big fat boys are having a correction around 3 to 6%, or let's make it 8%. So that will be having a huge effect on the whole index as well. And of course, you see other positions like the top 10, if they simply have a correction between 6 to 8%, this will have a definitely huge effect on the whole index. So there's nothing wrong with a little correction of 5%, or these 5.5% are simply marked in the chart. If you remember the black line, the first black line, slightly above that 50% retracement and scratching that 200 exponential moving average. So this is nothing wrong. This is nothing like a fairy tale. It could be the fact that we simply have a little dip down there. And the following dip, I simply marked that in a chart with the 8% on average, must be something like the 61.8% Fibonacci retracements. I simply checked in the chart as well. Of course, on top of that, there is a lot of, let's say, disinformation, misinformation, crazy information, news cocktail out there. Of course, on the one side, we got this older story right now. It's Evergrande story. You never know which kind of following effects that kind of Evergrande story for the Chinese market, for the Chinese bank market and other companies have, and having something like contagion effect to a couple of other foreign banks. You never know. Just one part of the story. But the whole news cocktail, the bad news came from the US themselves, looking at that whole story about the bridge financing regarding the fiscal year 2022, because they simply tried to make sure not to run out of money. So the shutdown for now is avoided. The next problem will be occurring in direction 3rd of December or beginning of December. They still don't have any clue about all these kind of packages they try to simply bring into the chambers and passing them. So a lot of trouble from the political side, a lot of trouble from this kind of news. And not to forget, another story is the debt limit. So somehow they need to regulate, and somehow they need to, let's say, drive that kind of a car around the bumps, around the corners to get that job done. Okay, this is another part of the story which could lead to a little bit more bumps ahead, and could lead to more something like a correction. Nothing wrong with that besides that. And the third point, not to forget, we already know the Federal Reserve, and Fed Powell himself already told us that he is about to taper, and the tapering process is already spoken about November, for example, or end of the year, and the first hikes in 2022. So all these kind of news together, let's say, deliver us something like a cocktail, not being very perfect for stocks in the next weeks to come. Just saying, it's a theory, and I somehow try to undermine that kind of theory with a couple of indicators and lines I draw in the chart technical picture. Of course, leave me some comments if you have a absolutely 100% opposite opinion. And not to forget, of course, right now it's Sunday, the weekend is over. That's why I simply deliver something like greets out there. Have a great week ahead. Hopefully really great trades, a loaded account with a lot of profits, and have a happy Sunday, still Sunday. Bye bye. And on top of that, very much appreciated if you leave some thumbs up and for example be a member of that channel. Thank you and see you next weekend. Bye bye.